Are you confused about the different healthcare choices that you have after losing your job? Well, be sure to stay tuned. In this video, I'll go over what choices you have and who they're best for coming up. So guys, just before we get into the health insurance types, I want to just kind of insert myself here and say that for those of you who are 65 and older, you have Medicare. So the topics that I'm going to cover in this video are not going to be for those of you 65 and older on Medicare. If you're 65 and older and you're on Medicare, you can go ahead and check the video I made up here. And if you need to enroll in Medicare, that's another thing. You can check this video as well. The links will be in the description below if you can't find it on the video. Aloha everyone, my name is Matt Ragudo and I'm a chartered retirement planning counselor and have my certification in long-term care planning. And in this video, I'm going to go over health insurance options that you folks have after losing a job. Now that could be either going into Medicare or going into the healthcare marketplace, but let's break down all the choices that you have when losing employment. So the first choice that you folks have when losing a job is going to be Cobra, and that's an acronym that we use, and it stands for the Consolidated Omnibus Budget Reconciliation Act, and it's never actually called that by most people, so you can just call it Cobra. It sounds better and it's easier to remember. Now Cobra depends and your coverage is going to depend on what you had at work. So there's two main factors when figuring out if you might have Cobra at your workplace, and when you leave your workplace, if you can qualify for it. Well, the first is your employer has to have at least 20 employees who are participating in the health plan. That's number one. Number two is you have to have lost your employment not due to being terminated, so you cannot have gotten fired. The other thing that you must realize when thinking about doing Cobra is that it's gonna cost you 2% more than what your employer pays, and that's due to a administration fee that's tacked on to your insurance, because you're not going to be group billed, you're going to be separately billed, so that administration cost is factored in at a 2% amount. If you elect Cobra coverage, it's only extended the entire time that your employer is there, and it's also only active for about 18 months unless there are other qualifying events. And you can go ahead and check the link in the description below for the rules on Cobra coverage and if you may qualify for an extension. Now Cobra is going to be for people who have a really good plan at work and also that can eat or can pay for the penalty. Many times I've helped people with Cobra, and their Cobra premium is anywhere between $500 per person upwards to $1,000 per person, and that's going to completely depend on your employer group. So that wherever you came from before that job, if their claims rates was really high, you could be looking at paying $1,000 a month for your premium. On the other hand, if it's really low, you might be paying anywhere between $500 to $600 a month per person. Now the next obvious choice for health insurance, if you don't have or if you lost your job, is going to be the healthcare marketplace, the ACA or Obamacare. Those types of health plans are available from healthcare.gov. Now, when's the best time for you to pick a healthcare.gov plan? The first is going to be if you can qualify for subsidies. So let's go and look at what it looks like and how to qualify for subsidies in the computer. Alright guys, so this is the healthcare.gov website and income level and savings, and I'll have the link here in the description below to find out if you qualify for healthcare premium savings or cost share reductions. So what you need to do first is you need to put how many folks are on your tax returns. If you're single, then you would just put 1. If you are married filing jointly, you put 2, and if you have children, make sure you add them up if you still claim them as dependents. If you don't, then don't add them here. So let's go for myself. I have a family of 4. I live in Hawaii, and this is the really important part here. So for those of you who are losing a job, you must estimate, or you need to be estimating your household estimated income for 2020, now that you have one, begun collecting unemployment, and two, you perceive that your unemployment boost from the federal government is going to end in August. So pretty much you, at the end of this month, July 2020, the $600 federal unemployment boost is going to end. So make sure you do take that into consideration when selecting this income range. And again, if you're wondering about the legality of that, they want you to start with your adjusted gross income and update it for expected changes. So again, here it says saving this year on your income estimated for the year you want coverage and not last year. So this again, and I don't know how many times I want to stress this, but you need to understand that it is not based on your 2019 or your prior year tax return. This is based off your estimated adjusted gross income. So things that can decrease your adjusted gross income is going to be things even to the point of contributing to IRAs or 401ks, making donations at up to some level this year, depending on the tax laws. So your adjusted gross income can be lowered, and they really just want you to make a educated choice. And the reason why, if you ask me, why you should start a little bit lower or be on the more conservative side is because when dealing with a level of coverage called the cost sharing reductions, so whenever you talk about the cost sharing reductions, those things are not going to be they're not going to be retroactive. They're going to be as consumed. So if you are indeed qualified for cost sharing reductions, but tax-wise at the end of the year, you do the calculations, you're like, oh yeah, I'm qualified for cost sharing reductions, but I didn't put it in my premium, or I didn't put it in when I had my application for healthcare.gov, they're not going to reimburse you for those times. On the flip side, if you did qualify for cost share reduction plans, and we'll get into that just in a little bit, but if you weren't qualified for it, but still you were in the cost sharing reduction plan, they would not quote unquote claw back those premiums, and that's kind of because of the administrative costs, and they just want you to be more on the honest side versus deceptive side. So please keep those things into consideration when filling this out. So back to the income level amount. So this income range here is pretty much going to tell you the 3 different tiers of coverage. So the first tier is here. So if you make below $41,579 in the state of Hawaii with a family of 4, you actually qualify for Medicaid. All right, so that's a free, almost zero cost coverage through the state Medicaid application. You can go ahead and do that straight from here. The next tier is going to be the premium cost savings. So premium plus extra savings, and that again is that cost sharing reduction right up here, which would be applied to silver plans. So if you go ahead and push forward in this, you'll find out that the silver plans have better cost sharing than the gold and platinum plans at normally a lower rate. That's for another video, but that's kind of where, if you fall in these 3 categories, the last one is just the lower monthly premiums. You can see how much they cost you, and if you are in one of those 3 categories, either this one, or this one, you probably should look at the healthcare marketplace and compare those to the cost and coverages you get on Cobra, because Cobra can be as low as a bronze plans in some states. In my state, Cobra plans have to be at least gold level. So if you can find a gold level plan that's comparable to the Cobra plan on the healthcare exchange for less than you pay, then of course mathematically the healthcare exchange plan is going to be better for you. All right, so we got a kind of good idea on where the income needs to be if you want to qualify for subsidies, or if that's even a good choice for you. So when is it the best choice for you? Well, the first is, we said, if you qualify for subsidies. The next is if you run out of Cobra. So I first choose between Cobra and the ACA plans, figure out how much Cobra costs, how much you can save, and then look to see what it's gonna, or how long your Cobra is gonna last. Because if it's only gonna last for 18 months and you most likely won't get another job because you're maybe changing career into entrepreneurship, or you're going to do Uber or Lyft or something like that, you might want to just transition early so that you can get a better feel and kind of not put it off, so you can already have your health insurance in place. Now, the next type of health insurance is going to be what's called short-term medical. And short-term medical plans is geared toward, again, short-term. These typically can be bought for the entire period of 3 years maximum. And they're going to come with a lot of fine print. So what I would say is short-term medical is for people who are healthy, have no pre-existing conditions, because the health insurance or the short-term medical insurance actually can disqualify or not include coverage for anything that you had in the past. They also can look back infinitely. And even if you bought the policy and you think of, all right, I got this great policy, it covers 100% of all the stuff that could potentially happen, and you got the policy in the mail, it's going to tell you that this policy is underwritten as claims occur. So what that means is that, let's say you went into the hospital for something, and the insurance company then, before paying the claim, looks into your medical history and finds something that would disqualify you from receiving that coverage. They will do so, and they will not return any of the premiums that you previously paid. So always look into the short-term medical guidelines, and I would always look and ask a broker, whoever you're talking to on the phone about it, what the coverage guidelines and coverage limitations are, because these short-term medical programs, and I don't actually endorse any of them, but they are available. Make sure you ask whoever is talking to you and consulting with you on the phone all those things, all the coverage guidelines, all the coverage exclusions, all the limitations of your policy. Because unlike the first two we spoke of, which is Cobra and the ACA plans, these plans don't comply by any of those, pre-existing, have to cover, no limitations on coverage guidelines that the ACA has. The last type of coverage you can get is going to be what's called Cost Sharing Ministries. And Cost Sharing Ministries are a little bit different from insurance in the fact that, well, they're not insurance. They have to use different terms. So instead of deductible, they may use sharing amount, or before you've met your annual sharing amount. And what their underwriting criteria is a belief system. So depending on the Cost Sharing Ministry you find, some of them can be as simple as having a belief in a higher power, and some of them can actually go down into quoting separate scripture that they believe in. So these plans, again, are not ACA compliant. They're not going to be like Cobra or the Obamacare plans on the healthcare exchange. So the coverage guidelines that they follow are going to be completely up to the Cost Sharing Ministry. And it could be up to the point where every month you may be writing a check to somebody because they're part of the program and you are paying them for their your premium is going to pay for their care. And now that's not really what happens for a lot of them, but that could happen. So I just wanted to let you guys know that sometimes you'll be writing a check to somebody to cover their medical expenses. And the most important thing to look at is to really talk to somebody and find out what the coverage limitations are. A lot of these brochures are going to be really nice, and in the small fine print it's going to say stuff like, well, we don't cover any pre-existing conditions, we don't cover any surgeries in the first 180 days, we don't cover pregnancy, we don't cover planned pregnancy, we don't cover blah blah blah. So make sure you look at the Cost Sharing Ministries, because not all of them are the same, unlike the Obamacare plans. All right, so I know losing your job can be very difficult. Making that transition can be very confusing. I've included here a free checklist for you to go ahead and look at to figure out what are the main issues that I can or I should consider when losing my job. All right, it's in the description below. Well, I hope that answers your questions on health insurance when you lost your employer coverage. Be sure to check back here for more health insurance, retirement planning, financial product topics so that you can make the most of your retirement. All right, we'll see you in the next one.